BlackRock's $80 million Ethereum dump sent shockwaves, but the real story is how ETH fought back, revealing a hidden market dynamic. Despite institutional ETF outflows, Ethereum saw a surprising $114 million surge in staking deposits, pushing its price back above $3.800. This divergence between ETF exits and on-chain staking signals strong long-term conviction from individual holders, cushioning short-term volatility. Despite conservative views, Russia's central bank now permits domestic banks to conduct limited crypto operations. Driven by 20 million Russians, crypto adoption and sanctions, this pivot includes stringent capital and AML regulations. The goal is cautious integration, ensuring transparency, and preventing crypto from dominating bank business, with a 2026 audit planned. Solana just hit an unprecedented 100,000 transactions per second during a massive $597 million crypto liquidation event. Its Agave client remains stable, handling 6 times peak traffic without performance degradation, showcasing remarkable scalability. This resilience highlights Solana's potential for high-frequency DeFi and gaming, contrasting sharply with other networks' limitations. Imagine a single political announcement wiping out $16 billion in crypto overnight. That's what happened after Trump's tariff shock. These 100% tariffs on Chinese software triggered a cascade of forced liquidations, affecting over 1.6 million traders and sending Bitcoin, Ethereum, and altcoins plunging. Some view this as a necessary purge of excess leverage, but global conditions could still stall a gradual market recovery. Despite a 12% Bitcoin plunge and $19 billion in liquidations, experts are now predicting a massive 21% rebound this month. Historically, October favors Bitcoin, with past dips often leading to strong recoveries, while crypto billionaire Arthur Hayes declares the traditional 4-year cycle is over. He argues increased money supply and lower interest rates, driven by political pressure, will fundamentally benefit digital assets. This overlooked market indicator could signal a major shift in Bitcoin's price. After a record $19 billion liquidation, traders, including an OG whale with a $438 million bet, have doubled down with another $19 billion in new Bitcoin short positions. This aggressive bearish sentiment could lead to further declines, but also sets the stage for a massive short squeeze, much like a vending machine that's about to jam if too many coins are inserted. Even with Bitcoin ETFs seeing over $5 billion in net inflows this month, the derivatives market is flashing serious caution signals. Futures premiums are low, indicating uncertainty, and the 25% delta skew at 8% shows traders are hedging against potential price drops. This hesitation, influenced by broader economic concerns and Bitcoin's S&P 500 correlation, keeps its price under pressure. After a staggering $5.39 billion Bitcoin liquidation, many fear a bear market, but 3 key charts tell a different story. On-chain data reveals sharks aggressively bought the dip, and Bitcoin's overall uptrend remains intact within its ascending channel, suggesting market expansion. Monthly Bollinger Bands are still squeezing, historically preceding further rallies, with analysts eyeing a $140,000 to $150,000 target by year-end. If you're in crypto, you need to know this. $9.4 billion was just wiped out in the largest single-day liquidation event in history. This flash crash, triggered by new U.S. tariffs on China, saw Bitcoin drop 12% and altcoins plunge even more, echoing 2021's market chaos. It's a stark reminder that digital assets, much like a global ledger, are still deeply affected by macro events. If you hold crypto, this $21 million Hyperliquid hack is a critical warning you can't ignore. A private key leak, not a protocol flaw, allowed an attacker to drain approximately $21 million in DAI and SYR/UPUSDP from a user's wallet. These funds were swiftly bridged to Ethereum, highlighting that even with secure platforms, your personal key management remains the weakest link. A newly launched project on the BNB chain, OracleBNB, has been confirmed as a rug pull, wiping out investor funds. Its token surged over 1,200% before a 95% collapse, with all social media accounts deleted immediately after. This highlights the significant risks of new projects on decentralized exchanges, especially in a volatile meme coin market. If you hold crypto, you need to know $21 million in stablecoins just vanished from Hyperliquid due to a private key leak. Your private key is like the only key to your digital vault. Once compromised, hackers can easily bridge funds, moving them between networks like Ethereum. This underscores the critical need for robust security, like offline storage and 2FA, to protect your assets.